Most people still think the market looks weak, but there's a big problem. Bitcoin's been trading between $78,000 and $80,000 for a few weeks now. And despite negative funding, bearish sentiment, recession fears, high oil prices, and expectations of more pressure from the Fed, even with a new Fed chair coming in, historically, the market rarely acts like this before a real crash. If you look deeper at the market, a very interesting structure emerges. First, most people are used to shorting on any news, whether it's positive or negative, meaning people often just don't believe in anything anymore. Moreover, most are expecting Bitcoin to hit the $40,000 to $50,000 range. So they're expecting a pretty significant drop and are taking exclusively short positions. But the market keeps holding up under pressure, and that's key because when the market doesn't drop even on strong negative news, it often means that the sellers are running out. And funding on many exchanges has been at strongly negative levels for 2 months now. This means most are still in short positions, or the market just doesn't believe in growth at all. It's exactly this kind of structure that creates a lot of fuel for a move in the opposite direction. Since most are currently short and used to shorting on any news, I suspect we'll soon see a move in the opposite direction, squeezing those shorts way up. This is where it gets interesting because crypto now depends not just on crypto itself and what's happening within it, it's heavily dependent on liquidity, rates, inflation, and global risk. US inflation is still above the Fed's goal. Their target is around 2%, but according to the latest forecasts, inflation is actually around 2.7%. Right now, the rate is in the 3.5 to 3.75% range. What's most interesting is that back at the start of the year, the market expected several rate cuts this year, but now those expectations are fading away. Moreover, they might even start raising the rate, given the current situation in Iran and all the other political and economic events, and investors are becoming increasingly pessimistic, as is the Federal Reserve itself. Oil is one of the main reasons for high inflation, and recently Brent rose above $110 to $120 momentarily. Now it's settled around $110 to $100. Generally, high oil prices put pressure on inflation. This means it'll be harder for the Fed to lower the rate, and despite the fact that a new chair has arrived, who many were betting on, especially in the crypto industry, thinking a new, more loyal chair would come in and lower the rate, meaning potential money printing, and the market would start growing sharply. But the rhetoric has already shifted now. The market is now actively discussing a possible policy change. It's precisely during such periods of uncertainty that markets increasingly start pricing in changes in advance. This is where it gets interesting. Despite high rates, expensive oil, political uncertainty, and inflation fears, Bitcoin is still holding at roughly average levels around $80,000. And that's very unusual for a truly weak market. After all, the crypto market is a risky one. It's young, not yet regulated, and even lacks transparency. That's why real bear markets usually break down quickly on negative news without any resistance. But right now, the market isn't dropping on bad news. It's basically just standing still. No matter what news comes out, Bitcoin is barely moving, continuing to hold liquidity and gradually starting to trap the shorters. And here, it all comes down to psychology, as most participants still think in terms of past cycles tied to halving events and such. And many are waiting for another crash, capitulation, a correction, and that perfect entry point. But the market rarely gives the majority a comfortable scenario, an expected scenario. Usually the opposite happens. And given that funding has been negative for quite a while and everyone's used to shorting, as I said before, expect a sharp move upward, because the strongest moves usually happen amidst fear, distrust, unpredictability, and when the majority is still waiting for another drop, another bottom. By the way, Ethereum also looks a bit stronger than before. Some altcoins have finally stopped falling and hitting new lows. They've even started to stabilize, and some are already showing strength and some bounces. This also doesn't look like a full-scale market capitulation. I'm not saying the market will suddenly shoot up now, because the macro environment remains difficult. Inflation is high, oil is high, the Fed is still hawkish, even with a new head who I think still needs time to settle in and figure things out. So I wouldn't expect a quick rate cut right now. If you look specifically at the market structure, it still doesn't look like a market that's ready for a full-blown collapse. And the longer the crowd stays overloaded in one direction, the stronger the subsequent move in the opposite direction can be. Watch the funding, liquidity, positioning, and the market's reaction to bad news rather than emotions. That's how a real signal usually appears.